The energy companies have been beat up over the last few years, and especially now dealing with COVID-19 and the dramatic drop in oil prices. However, what you've got to do now is look for companies that are in the right place at the right time, and Indonesia Energy is one of them. I started my career at Texaco Inc., had wonderful 23 years there, including as president of Texaco International Operations. But when I exited Texaco, the largest producing asset in the world for Texaco was in Indonesia. And together with Chevron, we were producing 1 million barrels a day. That's how significant Indonesia is in the world. That's why I joined Indonesia Energy Company a little over a year ago. We went public on the New York Stock Exchange in December of 2019, the first IPO ever done by an Indonesian company in history. It was the last IPO of the year and the last of the decade. So we have two assets in Indonesia. One is on the island of Sumatra, the other is on the island of Java. As a background, Indonesia is the fourth largest country in the world. Our asset on Sumatra, the Kru block, is 63,000 acres, and we've got 4 wells producing about 250 barrels a day. Jumping over to our other asset, which is on the island of Java, there we've got 1 million acres of a natural gas asset, just 16 miles from the capital city of Jakarta. 1 million acres in perspective would be 70 times the size of Manhattan. Gas prices there are 300% greater than natural gas prices here in the United States. So going back to Sumatra, where we have 4 wells producing, which historically has kept our company cash flow even. As we announced, we're going to take the proceeds from our IPO and drill 6 wells starting in July. With initial production expected at 190 barrels a day for each well, then 2 wells certainly more than doubles the production and cash flow of our company. So what you hear from us over the balance of this year will be announcements saying we've drilled 2 wells and doubled production and cash flow, then another 2 wells and doubled production and cash flow, and then one more time. The cost will be $1.5 million a well, and at today's significantly lower Brent price of $25, we expect to receive about $1.5 million in revenues over the first 12 months. That would be 100% of the cost to drill that well in only 1 year. So what we've got to do now is look for companies that are in the right place in the right time. With our 6 wells on Sumatra Island, we expect to drive down production costs to below $20 a barrel. We are a company that is still on track and is going to quadruple production in less than 12 months. That's why I believe we're a bargain right now in the stock market.
Hello, I'm Michael Kopinski, the Director of Research at Noble Capital Markets. Have you been following the oil markets and noticed the extreme volatility? It's hard to know which way to play the oil markets, right? Well, in this program, we uncover a unique oil and gas production company that can weather the storm of volatility in oil prices. The company's name is Indonesia Energy Corporation, stock symbol INDO, with a market cap of roughly 30 million. In this program, we'd like to uncover questions like, what is unique about operating in Indonesia that provides the company some financial stability? What makes Indonesia so compelling as a market? And how can a relatively small company compete with much larger players? We are fortunate at Noble to have an expert with more than 20 years experience in the energy and utility space, Michael Heim, a best on the street all-star analyst as surveyed by the Wall Street Journal. He will interview Frank Ingriselli, the president of Indonesia Energy. And before I turn it over to Mike, I encourage you to stick around for closing comments when Mike and I will discuss key takeaways from this interview. Enjoy the program.
Frank, thanks for joining us. You guys are a pure play in Indonesia energy, and I'm sure a lot of our listeners don't have much experience with Indonesian energy. Why don't you talk about Indonesia a little bit? What are the pluses or the negatives associated with it, being an energy company there?
Sure. I'll give you about 90% pluses and 10% negatives about being there. But, you know, a lot of people don't know Indonesia is the 4th largest country in the world. It has the largest economy in Southeast Asia, 16th largest in the world. An investment grade rating for the last 11 years. It's been growing at a 5% or greater GDP growth, probably not in 2020 as a result of COVID and the drop in oil prices, but still the growth is sustaining there. It has attracted really from over 100 years ago, and really the core over the last 50 years, it has attracted every major energy company in the world, whether it be Exxon or Shell or Chevron, or Texaco, whatever. They've been all operating there. They've had some mega fields. It's been a member of OPEC almost all that period of time. It has a stable government over the last 10 years. The president was just reelected. And the most important thing is the transparency and the stability of that energy sector in Indonesia. It really was a model, 20, 30 years ago when I joined Texaco, it was a model in the industry for developing contracts and the way contracts work and working with the national oil company to make sure they work. Just one point in terms of Indonesia, how important it is. When I left Texaco as president of Texaco International in 2001, Indonesia was the #1 producing asset in the world for Texaco, and for Chevron, which took over Texaco, the second biggest producing asset for Chevron, producing 1 million barrels a day at that time, the two companies. And today they produce 12 billion barrels and $1 trillion of cash flow. So a country that has welcomed the international industry, and now even more so, the indigenous entrepreneurial companies in the country.
Now, the regulation is a little bit different than we're used to. Your oil field, for example, is allowed to recover its drilling and operating costs. Explain how that works a little bit.
Sure. So we have two contracts. One of them is a cost recovery type contract, really like a production sharing contract that some of the major producing countries in the world work. So essentially, we're spending 100% of the capital in this one. This one is in the crude block, which I guess we'll talk about a little, but in the crude block, we're producing oil, have 10 more years left. We charge in every year 100% of all our costs, and we're allowed to take at 80% of all the production to use that to recover the costs. With oil prices low where they are, we probably won't recover all those costs. So you just keep rolling that forward, rolling it forward. And then the balance is the share oil, which then gets split between government and us. In our big natural gas block, the Citron block, it's a little different. We call that a gross, and it's a new type of contract, a gross split mechanism. And essentially, because it's a natural gas field, we get a little more to the contractor, which is Indonesia. We get about 53%, 52% of all the revenue stream coming in. In the first few years, because of some factors, we'll get closer to 60%, but overall 52% of all the revenue stream comes to us, and it's up to us then to recover the costs or whatever. There is no cost recovery cap, but they work very well. That contract is 30 years, the other is for 10 years. They've been proven, they've been working for our company for several years, so we're very, very comfortable with that.
Now, you mentioned we're in a low energy oil price environment. We rebounded a little bit in the 30s, but things are still low. But I mainly track, WTI prices. What are you guys seeing in Indonesia?
Yeah, so good question, Michael. It's in Indonesia, they really track or pay us pursuant to the price of Brent. And Brent is usually a little premium to WTI. I think right now you're probably at like 32 for WTI, 35 right now for Brent. So that's about a 10% differential. We get paid about a 5-7% discount from Brent. It's under a complicated formula, but essentially, historically, that's the way it has worked. So we get paid Brent, we get paid by the national oil company, Pertamina, and we get paid in US dollars. And we've tested that mechanism because we've been doing that for a long period of time, for several years.
Now, after you did your IPO last December, your partial IPO, you had some pretty big drilling plans. Has this lower oil price environment affected your plans going forward?
It really hasn't at all. And that's the kind of the message that we try to get out is, Indonesia, the reason that Chevron Texaco has produced $1 trillion in cash flow and has been there for 50 years is because it is a really low cost environment. And especially onshore oil, and especially on Sumatra Island, which is where our asset is. So even though, sure, we've lost a lot of the profit margin on oil, but our production costs historically have been around $20 a barrel, a little above. 2019 will be $20 plus a barrel. So at 35, we're making a margin, not a lot. We'd love it to be a lot higher. We'd love it to be back to 60 where it was several months ago, but it provides enough cushion, enough margin for us to move forward, which just as you said, we announced we're going to drill 6 wells. We're going to continue to drill those 6 wells. We probably lost 2 months because of COVID because of getting the permits and everything that was necessary. But we found a drilling contractor. We're going to start drilling in July, and we're going to drill 6 wells and not stop. I think our competitors or our comparable companies in the U.S., they basically have shut down. They shut down production. They shut down drilling. We're moving forward, and again, blessed by a low-cost environment in Indonesia.
What are you seeing in terms of operating costs? What type of oil price do you need for this to make sense?
I mean, while our production costs are about $20 a barrel, I mean, I believe, we probably want to see at least over $25 to still keep drilling, still keep producing, and we're well above that at this point in time. I mean, when we finish these 6 wells, we will move from about less than 300 barrels a day today to over 1,200 barrels exiting the year, barrels per day. So that's a 400% increase, quadrupling our production when everybody else is shutting things in and shutting down. So we're excited about that operation. We're going to continue with it, notwithstanding the tragedies around the world, here in the U.S., everywhere in the world, and in Indonesia, but we're moving forward.
You mentioned the long history of the major oil companies in Indonesia. You're a small player. How do you kind of fit? What's your competitive position with them?
Yeah, so that's a great question, Michael. It is a small company. Obviously, it's a microcap company, but as those major companies like Chevron, when I left Texaco producing 1 million barrels a day, Chevron Texaco, they're down to 200 or something thousand. They've been operating these fields for 50 years. The other big fields have depleted, so all that production is coming down. The government really didn't incentivize a lot of companies to start up new operations and develop new operations, but now they have introduced some tax incentives, other incentives, and most importantly, incentives for entrepreneurial small companies to step in the country and develop these sort of pocket opportunities like we have. Although one of our fields is a much larger field, but they've been rewarding Indonesian companies, and the starters of our company that started up this company have very, very good relationships with the government. The Minister of Energy was with us when we rang the opening bell on Wall Street. So was the Secretary General of the country, the 2 ambassadors to the U.S. Even though we're so small, we're the first Indonesian company to ever do an IPO. So it has their eyes, it has their attention, it has their partnership to bring a success for our company.
We've been talking mainly about oil at this point, but you do have a gas play as well, and a gas play that gets very favorable gas pricing. Why don't you talk about that a little bit? Sure,
yeah. So that asset is on the island of Java. And if you go to our website, you can see these pictures of the maps. It's on the island of Java. It's 1 million acres. And it sits on the edge of the block, sits only 16 miles from the capital city of Jakarta. So, that is the largest island by population, obviously the largest demand with the central city of Jakarta and all the industries built around there. So we're sitting there on 1 million acres. 4 wells have been drilled on our field by a prior public Canadian company that went to the edge of bankruptcy because of the old fall in oil prices several years ago. And we were able to acquire this in a competitive bid from the government. But it's a natural gas play. Gas prices in Indonesia are at about $7 an MCF, whereas in the US you're at $2, about $2. I haven't looked just recently. So we're looking at a 300% benefit in natural gas prices. The gas demand in Indonesia is growing dramatically. We've got infrastructure in our block. So we're sitting on a perfect position to go ahead and start to develop that block and do activities on that block.
Well, a couple exciting plays, and certainly something we'll be keeping an eye on. Thank you for your time today here, Frank, and appreciate everything you've done for us.
Great. Well, thank you very much, Michael. Thanks.
So, Mike, it was a really interesting presentation. I was struck by a couple of things. The fact that the fact that this company has a history there, and that other companies have had a history there, and that, so there's some process that they've been participating in for some time, for the last several years. So I thought that was very interesting. The other thing that I thought was interesting is that they were talking about that there were some incentives for small companies like themselves to develop pockets of opportunities. and although they have one big field. So I was curious about how large of a company could this become, given the fields and so forth that you see as an opportunity for them to grow.
Yeah, the regulation in Indonesia is very complicated, and it's on a contract by contract basis based on some generalized themes. But it's clear that the Indonesian government wants an energy infrastructure involved. And when things, they recently have made some changes that incentivize producers to do drilling in the area. And even as the energy price environment gets a little bit weaker, they've made things a little bit more attractive for the energy companies. So it's clear that the government is very supportive of things. As far as what that could mean for a small company like Indonesia Energy, one of the things I like about this firm is it's got a balanced approach of investments. It's got the oil fields that Frank talked about that are producing right now and providing some cash flow. It's got some gas fields that they're about to produce that has some very favorable pricing mechanisms. A third area that we didn't really talk about, or Frank didn't really talk about, is a very large geographic area that they have control of, that they're just starting to do an independent study with the government. Now, this is a total wild card. It's nothing that I think is going to be happening in the next 5 years or so, but more at this point, just something to keep an eye on. But it does have the potential to really transform the company into a much larger company.
Gotcha. And I was struck by the fact that the company is in the gas business as well. And it seemed like an interesting opportunity, especially because of the pricing versus the US pricing. And I was just curious from your standpoint, is that a better growth opportunity? Is that a good growth opportunity for them, specifically because of the higher gas prices, and whether or not you think that there is a good growth opportunity for the company there?
Well, it certainly has the potential to be a very important component of the company because of the pricing. You don't think natural gas, which is used primarily for heating, and Indonesia necessarily, but there are a lot of other uses for natural gas as well. And the fact that this field is located so close to the major urban hubs is very important. At this point, they haven't done drilling. They have property in a field where others have proven success. The wells are a little bit more expensive to drill. They're about $5-6 million a well, as opposed to the 1.5 for the oil. So they're going to probably have to raise some capital before they go too far into the gas fields. But that's something that I kind of view as a 2021, 2022 type of story. And the success of the initial wells that drill will say a lot in terms of how much capital they put into those fields.
Great. Well, Mike, thanks for bringing this company to us today. I also wanted to mention to everyone that if you have interest in this company or other companies that Mike Heim follows, go to channelchek.com. That's channel, CHANNEL, check spelled CHEK.com for more information on Indonesia Energy, as well as other companies that Mike Heim follows. Again, thank you, Mike, and thank you for participating.